welcome the Chair of the Discretionary Investments Executive Committee and Board Member, Mr. George Delvermartin Optimal, joining us this morning to take care of us, look after us, and guide us through this important conversation. So very good morning, and thank you, George.
Thank you so much, Sandra. Really appreciate the warm welcome, and a very warm welcome to everybody, and a welcome to this FIA Discretionary Investment webinar. A warm word of welcome to our IFA members and special guests joining us this morning. It's great to have you with us for what promises to be a really engaging and practical discussion on the role of collaboration between platforms, in this instance, linked investment service providers, discretionary investment managers, and advisors. This is really all about the advisors and their clients, and ultimately how that alignment leads to better outcomes for all of the advisors' clients. I had an interesting discussion the other day with Ronald King. A lot of you will know Ronald King, the infamous Ronald King. And he was chatting to me, and he said to me, it's a pity that the acronym of DFM has come into the fore in the financial services industry. DFM is synonymous in South Africa. If you go up to Europe or the UK, they refer to them as MPSs, Model Portfolio Services. And the reason why he was mentioning this is that in South Africa, there are over 900 Cat 2 investment managers, and a lot of them are actually wealth practices. So the larger professional wealth practices have acknowledged and have seen the benefit of having an investment management capability within their businesses to best service their clients. And more recently, we even saw one of the very large industry players launch a suite of multi-manager portfolios, once again highlighting their recognition of the alignment to having a discretionary fund manager as part of an advisory process. They go hand in hand, is what Ronald's discussion with me was all about, and I fully support his views on that. So a big thank you, as always, to the FIA for creating this forum where we can have these open industry level conversations. To our two moderators, Diane Janse van Rensburg and Charlene Prinsloo, who are representing the FIA today, and who will be steering the discussion and keeping us on track. We're fortunate to have four outstanding panelists joining us today, each bringing a wealth of insight from different corners of the value chain. First of all, just in no particular order, from 91, we've got Daryl Welsh. Daryl is an industry veteran. I've known Daryl for many, many years. Daryl was probably around when the South African shores saw the first linked investment service provider, being TMA, open its doors in South Africa. Unfortunately, that was a sad story as to how that ended. And then from Old Mutual, we have Ferdi Boysen, also many years of experience in the wealth industry and platform business. From Glacier, we have Elton James. Elton, too, has been in the game for many, many years, and a lot of you around the country would have seen him representing Glacier at many functions. And then Life Cycle Investments, Zander Lee Clifford, bringing a fresh perspective to platforms, discretionary investment management, and advisor collaboration. And thank you to all of you for taking the time to share your experiences and perspectives. So today's conversation is less about theory and more about real-world collaboration. How the platform, the linked investment service provider, the discretionary investment manager, and the advisor can work together to simplify complexity, remove biases, and deliver consistent, high-quality outcomes for clients. Once again, emphasizing the client as the ultimate beneficiary to this collaboration. Because at the end of the day, that's what it's really all about, the client experience and TCF. It's about how we combine technology, structure, and human advice to build trust and deliver value that lasts well beyond the investment performance alone. So I'd encourage everyone tuning in to think about your own synergies that lie in your own businesses and how we can shift from working in parallel to truly working in partnership. Something I mentioned just while we were warming up for the session was that a lot of financial advisors across the country feel that bringing a discretionary investment manager partner into their business increases the fees for their clients. I want to reassure you guys, we have demonstrated it over and over again that this is not the case. In most instances, having a discretionary investment manager in your practice helps you reduce your client fees in the long run and helps you produce better outcomes for your clients over time. With that, thank you again for being here. Let's get straight into it. Dion and Charlene, over to you guys to get this conversation started.
Good morning. Thanks, George, for that introduction. So platforms has evolved over time, being just a transactional utility and becoming a strategic partner for DFMs and advisors. So it started as a product platform, and today it's more of a partner platform. So I'd like to get a view of a panelist on how their platforms has evolved over time to become a strategic partner for DFMs and for financial advisors. And maybe I'll start with Elton. You're at the top of my screen. So maybe we'll start off with yourself and then go to the other panelists on how your platform has evolved over time, being that strategic partner for DFMs and for financial advisors.
Good morning, everybody, and thank you for the opportunity to be here. Good morning, Dion and Charlene, and thanks for kicking off with me, Dion. Could have prepped me for that one, but no, never mind. Thank you. Yes, Glacier, 30 years in existence, and walked a long road from starting out as a traditional, effectively a cash fund as it started out and evolved into a linked investment platform. We certainly have evolved, and today we would see ourselves as not just a linked investment service provider, but as a investment solutions provider. And I think the word solutions is probably the key to how we view ourselves in supporting and partnering with advisors. Clients at the end of the day want solutions that align with their dreams and the outcomes they want to achieve. And in terms of combining all the elements of the value chain is being able to support those needs of every element and coming up with solutions that ultimately fit the client's requirements that the advisor and the client enter into. So I'd say we've evolved, as you suggest, from platforms being product providers to a solutions enabling system that we would see ourselves at.
And maybe Daryl, you can come in here. I mean, 91 has also been in the market for many years. If you can maybe elaborate on your journey as a platform.
Yeah, thanks, Dion, and thanks. It's great to be part of the discussion. We've been here for 31 years, Elton. So just kidding. I think I think the platform industry is at a bit of an inflection point. If you think, and both yourselves and Dion and Elton have already said it, platforms have kind of evolved from being an administration service to offering a more holistic proposition for both advisors and for DFMs. And at the end of the day, we're all in the same game here. We want to provide good investment outcomes for clients. And there are different ways in which each partner in this collaboration can actually achieve that. And I think the platform's role is around, it's not about adding more products or cutting charges. It's about integration. It's about providing intelligence, and it's around the intent in the way in which the platforms work with the DFMs and the advisors. So integration, I think, is a big part of it, and I think that's probably the next evolution for platforms. Up until now, being purely transactional, I think over the last, I'd say, 10 years, platforms have digitized a hang of a lot of the processes and a lot of what they offer advisors and DFMs. And so the integration piece to me is going to become critical in the future, and that's integration both into the DFMs themselves and into the tools that advisors use and the advisors' practices. And to me, that's important, because if you look today, we have about 1,500 funds on the platform, but we've got about 2,000 model portfolios. And so there's clearly, a very strong need for model portfolios from the market. and that brings with it some complexity, both for platforms, but for the DFMs also to manage those model portfolios and implementing investment decisions across multiple platforms. And so to me, the next evolution is around integration, and I'm sure we're going to get onto a bit of that later on in the discussion as well.
Maybe you mentioned now there's more than 2,000 models. Why do you think there was such a growth rate in models compared to funds on your platform?
That's a good question. I think, in many cases, a lot of advisors prefer to have bespoke model portfolios. So a lot of the DFMs may prefer to run generic model portfolios. So, let's just make it simple and say a low risk, medium risk, and a high risk model portfolio. But I think as the advice process has become more sophisticated, it's kind of proven that it's not a one size fits all. And so a lot of advice practices want their own bespoke models. And so, a typical advisor firm will have 3 to 5 model portfolios. And so you can quite quickly see, if let's just say 500 advisors are using model portfolios, you quite quickly get to about 2,000 model portfolios on the platform.
And Ferdi, if you can come in here, we know Old Mutual has been investing in DFM capability. If you can maybe elaborate on how you can become a strategic partner for DFMs and advisors.
Thank you, Deon. Good morning, everyone, and a warm welcome from the team at Old Mutual Wealth. It's a privilege to join you this morning. And I think it's a very appropriate topic because it's certainly something that's been occupying our mind for the last number of years. And, the whole DFM movement has really, gathered a lot of momentum over the last 5 years. And we've seen tremendous growth, not only on our platform, but in the industry, in the support to DFMs. I read the other day that it's estimated that for IFAs, between 40 and 45% of IFAs have a third-party relationship with a DFM. And that has increased significantly over the last year. So we've positioned ourselves to support that sort of growth trend, and we've invested quite heavily in our integration capabilities with DFMs. We brought online last year a system that can integrate with all the DFM providers, and it really just enables a full self-service suite to the DFMs to partner with IFAs and their clients and make it really easy to manage those models. I do believe that a platform exists to really enable the value proposition of the IFA to their clients. And I think that's how we've evolved from let's call it a transactional platform to a partner.
Thanks. Zandile, life cycle is a relatively new play in the industry. How have you approached this platform market as a new player in the industry? Are you still on mute?
Sorry, Deon. For us, when we came in, we very much came in with this mindset of not being a product platform. I believe a product platform, you can almost look at it like a catalog, and a catalog gives you access to certain things, while a partner platform more co-creates. And we went into the market with that very mindset. So for us, it was never a evolution, because we did that from the beginning. We kind of went in with that mindset. Luckily for us, we didn't have to change anything. We just went in from the start with that kind of mindset. And I think our platform is very much tailored to advisors and DFMs rather than the open market. And because of that, we've gotten a lot of feedback from our advisor network, our DFM network, about how they would like things, how they would what they want on the platform, what they want to see, and we try and build it very much around that. And I think in seeing what is needed, you see that how much this industry is changing and how much DFMs are starting to play a critical role in advisors' capabilities to do for their clients the best thing that they can do.
Can you maybe provide an example of how you approach the DFM market? So what do you provide that's different to the market?
So I've never spent much time looking at what is there. I spend all my time looking at what is being asked of me. So a big complaint that came through our network is that there's not much flexibility in some of the platforms that they want. And for example, being able to rebalance at any given point in the month, not being restricted to a certain time where they can rebalance. Communication going out to investors. I think we'll get to a bit later, but there's a lot of events that happen that make advisors and clients very nervous. And the DFMs like being able to push out communication through the platform so that they ensure that all their clients get that. So we've made sure that's available. We've made sure that they can go online and rebalance their portfolio whenever they want to. We've tried to set it up in such a way that they can access a model portfolio for their client. They can access a unit trust. They can access whatever they want without separating a client's portfolio into separate investments. And I think that DFM network really, really like that. So it allowed us to expand our service quite nicely.
Thanks. And then a question to a panelist, to all the panelists. Our South African market tends to follow the UK market when it comes to financial advice, platforms, DFMs. What trends do you see in the UK? What can we learn from what's happening in that DFM platform and financial advice industry, and how can we apply it in the local market?
I'll take this one to start. I mean, I think if we look at the UK market quite closely, and in particular, there's one platform that we like to follow. It's called Transact. They're very similar to us. They're an advisor-focused, independent advisor-focused platform. And I think I'd say the difference is, look, South African platforms are actually quite advanced and in many respects are quite far ahead of global platforms. And, you know, the technology is actually not bad. The difference between South Africa and the UK, I'd say, is a lot of the DFM capability in the UK market grew out of almost the stockbroking profession. And so platforms in the UK have the ability to hold both listed securities and funds within a model portfolio. That's not that prevalent in the South African market yet. There are ways around it, but it's a bit clunky because of the legacy systems that most of the platforms in South Africa use. But what I'd say is quite appealing from what they do and what is very possible today in the South African platform market is around integration. And so Transact have very deep integrations with DFMs in that market, which allows the DFM to execute trades via, for example, APIs directly into the system. We've done similar things, and we have one DFM that executes completely through an API-driven interface into our platform. So they don't have to log onto our website to rebalance their portfolios. And so I think, the one thing that the platforms in SA could learn is around that integration piece, and how do you actually scale integration so that more DFMs can easily integrate into the platform. And to me, that'll be the key, to differentiating the providers with the DFMs going forward.
Yeah, I can just add on to that. And I think, one of the significant differences for me from the UK market is the diversity of DFMs that you get and the different styles and philosophies that you have. And it's more I don't want to say off-the-shelf solution, but an advisor can utilize multiple DFMs in their clients' solutions. And I think that differentiates them quite significantly from our market, where, yes, we do have some providers with off-the-shelf availability, but ultimately it's a contract between an advisor and a DFM to manage their clients' assets. So yes, we have a narrow market, so I think that's ultimately led to that scenario. But again, how you diversify in asset management, one could argue that there's opportunity to diversify DFMs as well, and we'll see how that plays out into that space. Digitization, I think, is critical, and Daryl alluded to that. And I think ultimately, the very exciting part, which Daryl also mentioned, is this being able to combine different asset classes and vehicles in a model portfolio. And that's the exciting phase. As new investment vehicles come to the market, lower cost, the use of ETFs, AMCs as they arrive, and even using structured products in a model portfolio could come to fruition. So there's a very exciting technology drive going forward. When that comes to fruition, I think you'll see quite a few changes in the DFM space and the ability for platforms to offer much more variety on underlying vehicles than what currently exists.
Yeah, just to add to that, Alton, we actually had a meeting with a platform in Jersey not too long ago, and they actually commented, as Daryl said, our technology in South Africa is actually quite superior, because they mentioned quite a few times that the South African platforms give them an example of what to do as well. The one thing I do see on their platform, specifically the company we had a meeting with, is that their onboarding integration is more advanced than I've not seen in South Africa on any of the platforms. So they've really got that nailed, and I think we can take a lot from that. And their white labeling capability also is extremely well positioned and very flexible. And that is, I think, what we as platforms need to strive to in South Africa, because the more flexible those white labeling capabilities become, the better for the advisors, the better for the clients. You want to protect that advisor-client relationship at the end of the day, because that's what the client needs to rely on the most.
Diane, if I may just add, just more broadly on integration, it's certainly a trend that we've seen in the UK and Australia, where integration not just with the DFMs but also with the CRM systems of the advisor that they use, with the advice or modeling tools that they may prefer. I think it's a lot more sort of an ecosystem integration approach than what we've seen to date in South Africa, and I think we're definitely on that trajectory.
Elton, I just want to come back to your, you mentioned that the advisors use multiple DFMs. Have you seen this trend in South Africa as well?
Not necessarily, Dion. I think it's, as I mentioned, a lot of the DFM relationships are contractually effectively with a intermediary. So it's for, if I'm a practice, I have a relationship with the DFM and it's for my client base. Should that client leave me as the advisor, then technically that contract between the client, the mandate with the DFM, is effectively non-existent anymore. So it's slightly different there, where obviously they've got a broader universe, they're different strategies, a couple different asset classes that they can play in. So you can use multiple solutions in that space. Whereas if I look at the South African market, it's multiple solutions per practice, as opposed to investing in a Martin Optimal fund and a Glacier Invest portfolio, for example, a DFM, 2 DFMs in one solution. I'm not saying it's not going to happen, but maybe our market's a bit narrow in that space. So certainly on the offshore side, that's something that could possibly take place, but locally I think it's probably going to stay the way it is for now, unless something changes, but I can't see it changing quickly.
No, thanks. I'll hand it over to Charlene to discuss how platforms can enhance the advice experience.
Thanks so much, Diane, and good morning to everyone on the webinar today. Yes, I suppose the next section is particularly important to the community on the call today, because it's focusing around the advice experience and ultimately meeting the expectations of the advisors and their clients. And it'll be really interesting for us. We've spoken a lot about enabling value proposition and integration capabilities. Maybe if Zandali, I can just ask you, what is the role that the platform plays in that integration between, and Fadi mentioned it now just before, that integration between CRMs, DFMs, and the platforms themselves in terms of improving the client's experience and journey?
Yeah, so I think that the deeper the integration is between, those 4 kind of parties that are involved, the more the client can get information on exactly what's going on with their investment without having to look at 5 different places. There's errors that come in the more places you have to look. There's worry. Clients get worried when they see 5 different things. So for a client to have a one-stop shop, which should be the advisor at the end of the day, the advisors should have the one-stop shop for them, and they then link to the various service providers, being the DFMs, the platforms, etc. This avoids duplicate entries. It brings the whole client history and preferences into a decision-making framework for the advisor. So by making sure there's that deep integration, you make sure that the advisor has everything they possibly need and have their one-stop shop, basically, to enable them to service their client properly. they can look at, you can look at how you embed your data analytics and tools, etc., for the advisor. Having that in one place instead of having 10 different programs, the more embedded it becomes, the better for the advisor at the end of the day, because they've got one place to go look at. They can take their client through the journey, and they can make sure that their client's happy and that their client's needs are being met, that there's no issues being overlooked because we have to go look at 5 million different places to find an answer.
Daryl, do you mind shining a light on 91's perspective of that integration capability?
Yeah, certainly. Thanks, Charlene. So, I think if you think about advice efficiency, it's, how do you build advice efficiency so advisors can ultimately deliver better advice to their clients? And the way platforms can assist in helping with efficiency is by eliminating things like rekeying, the friction in the process, onboarding clients, the typical administration tasks that take so long to perform nowadays, and often is quite a burden on advisors. And so the one clear role of a platform is to make the admin as easy as possible, right? So ease of business is critical. So and every platform should really be focusing on improving the ease of business and the ease of dealing with the admin constraints that come in trying to make an investment. It's actually quite hard sometimes to make an investment, bizarrely so. So the first thing is around the efficiency. If you can build efficiency into the process, then you can start to focus on things like the data and the data quality. And up until now, I think a lot of the data has sat very idle. And if you think about what platforms sit on, they sit on a massive amount of data. We have, for example, call it 30 years of living annuity data in our systems, and some of those clients have been with us for 30 years. And so how do you take that data and turn it into merely producing a statement into advice prompts, for example, helping the advisor get far more intelligence on their clients and their clients' behaviors. And so that unfortunately does require integration, because not all the data always sits on the platform. But the data that does sit on a platform, certainly I think the platform's role will evolve from becoming one of data provision to providing data prompts using things like AI. I know AI is thrown around a lot, but we've seen some stuff recently that is quite exciting, and I'm sure we're going to get into that a little bit later. On the integration piece specifically, though, it's there are different ways to do integration. I think the easy way is sort of a one-way data provision. So we send data off to either the data aggregators or the CRM providers, or the tools that the advisors are using. That's fine, and in most cases that works for most use cases. The more integrated players in the market will go an API route, but the API integration, as good as it is, it requires both sides of the fence to invest. So you can't. Most platforms, I think, will today have some sort of API layer that is open and that people can access, but it doesn't mean that you can just plug into it. There's work required from the CRM providers and from potentially the advisor practices themselves. And so provided the industry gets together and gets this commitment from both sides, a lot of value can be unlocked. And so we'd be very keen to say, like, if the CRM providers and the tool providers to advisors are prepared to invest in the API integration, that really unlocks a lot of benefits for advisors.
Absolutely. I think data aggregation is becoming more and more important. And I suppose from our own personal experience, one of our biggest challenges in the business. And just following on that point, I think there's probably, the addition of them as a fifth player in this makeup and to enable the delivery of that advice experience to the end client is critical. Alton, do you maybe just want to give us a bit of an understanding from Glacier's perspective? Daryl mentioned it now, if there's a commitment from CRM providers, from data aggregators to enable that API integration, it will go a long way in delivering from a platform perspective to the end client. Your Glacier's experience on that?
It's been an interesting experience, and Daryl made good points to that point, I think. And I think the problem with data is that, again, we've also been around for a long time, so you have this vast pool of data that you can draw on. The problem is how do you make it concise and accurate and functional for the data provider, and ensuring that you don't have to keep building on to a data source or a data report, an API that you send across and so forth. And I think that was one of the biggest challenges is, we've got so much information. How do you build a report that's almost infinite? And as opposed to having to add on requirements, you can just tick a box and say, I want these requirements, and off it goes. So that was a challenge. You deal with a data provider, and then they have a specific requirement or a specific format that puts a challenge on you. And I think that's one of the issues in the platform space now, is the speed to delivery when it comes to technology and data, because it's not just a data provision. There's other things going on. You've got regulatory requirements, all these things going on. So it takes, to Darryl's point, it takes effort on one side, but it also takes the data provider. And we've had that experience where, at the start of the discussions, they're extremely excited. All of a sudden, things change in their business, and there's a delay on their side. So I think, it's a full circle of relationships here, and intermediaries also have to understand that it's not just on a platform side where there may be delays. The data provider may also be having to, implement a new system and whatever it might be, and that could also take time. So I think it's just more practical issues that come to the fore when technology is being used. It's not a plug and play. So a simple change can often lead to weeks of work. It's just one of those functions that occur. So unfortunately, it's just one of those things. I just want to make a quick point, if you don't mind. And Darryl alluded to it. I think it's the key for platforms in today's world is giving the advisor more time in front of the client. And it's about combining all those things. And advice experience is a practical thing. It's about how you engage with your product provider or your platform provider, and how they make it easier for you. And it's also about the optionality that platform gives you as the advisor to provide those solutions for your clients. So I think those were key points that Darryl pointed out.
Elton. Fadi, I'm going to come to you with a question. It's a follow-on, because we've spoken up until this point around platforms, DFMs, what we can provide to the advisor space. What can advisors do to enable that integration, a more seamless interaction between all of these parties that we've spoken about now?
Thanks, Charlene. Yeah, I think I echo the sentiments from Elton that, to do an integration, you require sort of both parties to literally come to the party. And I think understanding the practice setup, exactly how does the workflow in the practice work, who are the key role players in a practice, and how does that flow through the people's processes and systems. I think that's a crucial input to making that end-to-end process work between the advisory practice and the platform and the DFM. So my steer would be to just firstly gain that insight and understanding of exactly how that practice works. And we've got various specialists as part of the platform. I think we speak a lot about the processes and the systems, but there's some very specialist resources also that's part of the the platform proposition, that whose job it is to understand how the practice actually sort of functions on a day-to-day basis. And then sort of those requirements are brought into the business to build or to give effect to. So yeah, I think whether it's fiduciary support, we talk about the quality of advice, or whether it's financial planning support, I think those specialists do play an important role, apart from all the systems aspects and integration sort of plays.
Great. We are going to spend a bit of time a little bit later delving more into the regulatory environment, but just maybe, and I'll open this up to anyone who is happy to answer. What are your platforms doing in terms of supporting that compliance and regulatory environment for DFMs and the advisors alike? It's obviously an ever-changing and quite fast-moving space.
I have a first up at it, but a short and sweet one. I think it's difficult. Not so much on the wrapped product side, but on the discretionary side, I think we face challenges in that space. Obviously, a perfect example is the hedge fund regulation and the licensing categories in that space. And there's different requirements for a discretionary investment as there are for a living annuity, for example, in the use of hedge funds in a model portfolio, or any portfolio for that matter. And I think we are still as the advisor is responsible from their regulatory perspective, we're also responsible from that perspective. So, we have challenges in that space in how we manage, not so much the funding coming in. It's when DFMs terminate a relationship with an advisor or a client, for example, and that client moves to a new intermediary who's not licensed appropriately. So there are some challenges from a regulatory perspective. A lot of them, I think, are on exit or on change or switching, rebalancing. And there it's about manual checks and processes at the moment because it's all on actions that you haven't got control of at this point in time. So I think at new business stage, I think regulations are in place and it's well managed. It's all, it's done electronically or digitally, but it's on when changes to portfolios or intermediaries take place. I think there's still challenges that we face in that space. But ultimately, and then, down the line, I think the DFM space, in my view, will probably become more regulated, I assume, as it starts to gather more momentum. And we'll have to see what happens around that. I'm not too afraid with what has been discussed in that space yet, but certainly from a product perspective and a management of regulatory consequences in that space, I think the industry is in a very good space. It's just there are certain little gaps that need filling, and we find challenges in that space at this point.
Great. Paddy, do you have anything to add there?
Yeah, I think we've seen a lot of movement since we got grey listed in this space. I think there were very intrusive audits happening all around the industry to help us get back into the green territory. But yeah, I think the onboarding, as Alton mentioned, the onboarding is fairly established. There's a whole bunch of trigger events that's also come into play, and between ourselves and the planner practice and the DFM, we need to sort of have consensus around how those trigger events are treated and what information is required, and make sure that getting that information is as slick as possible. I think it's also important to, as a platform, to reuse as far as possible what we have on a particular client or entity. And also source what we can, from third parties seamlessly where it's possible. So yeah, I think it's an evolving space, and I think we've got Kofi coming soon. So I'm sure there'll be further developments hitting us next year from a regulatory requirement perspective. But yeah, I mean, we're geared up for it, and yeah, we always have that end-to-end experience in mind when we embark on these initiatives.
Great. Thank you. I think I'm going to hand over to Deon to get into another very topical discussion around managing behavioral bias and the support that between DFM and platform we can provide our advisor community.
Thanks, Charlene. Yeah, so as we know, investor behavior often undermines the long-term outcomes of clients, and from research we can see there's quite a significant impact. Many clients underperform the market by 3 to 4% due to this investor behavior. And platforms has come a long way to giving tools available to advisors, doing performance or portfolio analysis. Clients got now access to the investments on a daily basis. So investor behavior is often influenced by cognitive biases such as recency bias or loss aversion or overconfidence. But that is, I think, some cases has increased over time because now there's more information to advisors and clients. So how does platforms use analytics tools or education to manage this behavioral of clients or investors? And what role do you think a DFM can play to manage this biases from clients? I'll open it up to anyone that's wanted.
I'm happy to kick off, Deon. I think when it comes to investor biases, I mean, we all have our particular biases. It's very difficult to avoid. I think self-awareness is the first step. So, when it comes to planners and their clients, I think context is everything, especially when there is a tricky situation in the market or there's been a big event. It is really important to be present in the lives of clients at that time, and communication at those points are critical. What we've also found, just in terms of the experience between planners and clients, if we look across our book, You see different approaches to client onboarding, and actually how a client is onboarded also drives some of, the actions that you see post onboarding. If a client is anchored, on costs or fees or, outperformance, it results in certain behavior versus, being onboarded on achieving a particular goal or outcome. And you see those differences play out in those, turbulent times when, markets crash or when there's a big sort of international event. So I think how clients are onboarded is critical to almost preempt, some of these behavioral biases playing out over time.
I'll maybe just, you guys, Annalie?
No, Daryl, Shame, you can go. It's fine.
No, ladies first.
Ladies first, okay. I just wanted to say that with the behavioral kind of bias that happens in clients, it's very, and like Fadi said, it's very much looking at how that client came on and how the relationship between that advisor and the client is at the end of the day. Because if you get clients who completely trust their advisor, they barely look at their stuff, they just want to see a number at the end of the month and they're happy to go on. You get clients who want an in-depth kind of understanding of exactly what's going on. So I think a very good place for platforms to start to try and mitigate this kind of investor bias, bad decisions when big events happen. You want to present a narrative to a client rather than the raw numbers. The raw numbers always take you back to a very sticky situation with your client, and rather look at a goal, progress towards a goal, present a narrative. And a platform, I think, in my opinion, can assist an advisor in doing that by giving them access to these kind of narratives, giving the data to them in a way that's not just, okay, we've lost 5% of our investment, now what? Looking at a progress towards a goal rather than what's happening now, and helping the advisor communicate that to a client in very clear and sensible language that might assist the client. There's been a lot of studies done on the psychology of investing. There's a lot of practices opening that's not necessarily a FSP, but outside kind of service being offered to an FSP, where you look at dealing with the psychology of your investors, doing some kind of work to understand their psychology. And I think integrating a service like that into a platform for advisors to access, where they can really drill down to understanding the decision-making process of a client and how they should manage that, is very important. And we've actually been looking at integrating something like that for a while now, because it's really understanding that person. And the reality is everyone makes a decision differently. And an advisor cannot just say, well, here's the fact, this is it, be done with it. You need to be able to get into your client's mind and help them understand why making a rash decision when something is going bad is not a good idea. And the platform can assist by providing these kind of narratives rather than just the raw data, because it's easy to give them the raw data, but it's not always easy to present that in a narrative which shows that you are still on progress towards your goal at the end of the day.
I think, a lot has already been said. I'll just add to that. I think like it's ironic, that in one sense, the industry has been pretty good at providing transparency and information through to clients. And I think if we think in the next couple of years, we should expect clients to have even more access to information, and be that through mobile applications or through online websites. Ultimately it's a client's investment, and it's not a far stretch to think that that clients will look at their investments a lot more frequently. And I heard a term the other day called it dashboard dopamine. Clients getting a fix from having a look at their investments on a daily basis, and that can be very dangerous because that triggers investor behavior, and that ultimately can undermine the long-term outcomes that the advisor and the DFM have set for that client. And so, it's difficult. It's very difficult for the platform to step into that space. I think a lot of that actually sits in the advisor space, and it's for the advisor to manage that relationship with the client. But the role that the platform could play in that is to be able to provide the advisor with prompts or alerts that can warn the advisor. There's simple stuff already that we can do, which enables the advisor to see which of their clients are logging into the website, how often are they logged in, what information are they looking at, and so that sort of behavioral insight can be given to the advisor to better manage the relationship with the client. Ultimately, I don't think it's the platform space to step into the advice framework and to try to manage the client's behavior themselves. It's rather leave that to the advisors.
If I can just elaborate on that, I totally agree. And I think as an industry, we've become extremely good at communicating effectively through the right channels and sharing of information that can hopefully help advisors put clients at ease and so forth. But I also just want to reiterate from a DFM perspective, and I think this is one of the greatest advantages of partnering with the DFM has brought to market, is that in the past, when Daryl first started, which was a long, long time ago, apparently, it was chasing performance numbers, and your outcome was your best performance. Nowadays, it's about understanding an investment process and philosophy of a DFM, and putting together an outcomes-based solution for that client. And I think being able to have that discussion, the DFM also imparts a lot of knowledge to the advisor in terms of understanding how their portfolio is constructed, how it's working, the different styles it's going to do, or how it's going to perform in different markets, and so forth. And I think that all that knowledge coming together is enabling the advisor to have the technical discussion with the client. So that's one aspect of it. And then Zanderly correctly says, the psychology aspect of it is becoming more and more important. But I think if you as an advisor are confident that your DFM is producing the outcomes that you want, and they've got a due diligence process behind it, they've built an investment philosophy and structures and analysis, and I think you should have a lot of confidence in that as an advisor. And then it's about taking all that information and then managing your client's emotions, and that's the skill that the advisor really has to leverage these days. Asset management, portfolio management, you're outsourcing that. It's that psychological aspect, that emotional behavioral intelligence that you can bring to the party. That's a real skill set that the top advisors are going to leverage massively, I think.
Yeah, it's a good point you made about investment philosophy and process, because I think Fadi mentioned that sometimes portfolios are sold on fees or performance. And as we all know, past performance is not an indication of future performance. And if you understand the investment philosophy and process, clients should stay longer invested in a portfolio through the different cycles. You don't want the client to panic at the bottom or to buy at the top. You want them to stay invested through all the cycles. And I think also we didn't discuss it now, but education is also important. I know many of you is also engaged with webinars and that, and I think education to clients is also critical into managing their behavior. To the next topic, I'll hand over to Charlene to discuss how platforms can support the DFM value chain.
Now, we've already started to touch on the various ways that the platforms are providing that support, but maybe we can drill down into some of the detail. So we've spoken about AI, we've spoken about data. What technological advancements or innovations have your platforms seen to be most promising in supporting that DFM platform interface? Maybe, Elton, if we can start with you.
Where do I start? Look, it's an ongoing process, and it's a very exciting process. I think we're embarking on a massive technological shift now with a back-end system that really will open up a significant universe to investing. And just high-level stuff, being able to utilize direct offshore funds in a living annuity as opposed to feeder funds, for example, through asset swap. And using a Reg 28, so a multi-currency system that enables a Reg 28 portfolio to be directly invested offshore in a BlackRock fund as opposed to a local feeder fund, for example. So bringing that diversity to the fore as new instruments hit the market. You're seeing the growth of ETFs globally. Being able to utilize them. It's a difficult process at the moment because they don't fractionalize. So it's about being able to make those more accessible and easier to use from that perspective. So on the one hand, it's the technology that will allow multiple investment vehicles to be used in a wrapper. I think the functionality of being able to trade directly in a DFM practice, for example. I think at the moment, from our perspective, we're not there yet from a online capability, but that's in the build at this point in time, and giving accessibility from that perspective. So I think we'll see significant advancement in the whole value chain from a technology perspective. And yeah, from our world, it's about, if I look at Glacier specifically, it's taking currently 4 platforms in our business and merging into one single system that enables that flexibility across the board. So switching between local and offshore, yes, there are some forex requirements, but being able to switch between the two, enabling that functionality and flexibility will be very exciting down the line. So yeah, can't divulge too much, but there is a lot going on the back end.
Right. Fadi, do you mind giving us an idea of Old Mutual Wealth's tech enablement?
Sure. Yeah, I mentioned right up front that we've invested quite heavily in our DFM sort of servicing functionality over the last few years. It's been running for a while now, and yeah, the DFM partners are very happy with the functionality. I can state sort of publicly. It's a full self-service suite where they can manage their models. They can give access to the relevant partner practices. They can run parent-child models and rebalance like they need to. So it's really sort of changed I think the value proposition from the platform to DFMs, from an Old Mutual Wealth perspective. And I think it is something that the DFMs have been asking for some time. So yeah, we were quite excited about the build being complete and rolled out to market. I think it is really important with the proliferation of models that I think Daryl mentioned right up front. If you can really make that model management easy for the DFM, it just allows them to service their partner clients a lot better. Yeah, I think with the compliance requirements built in, I think it's really made life a lot easier for DFMs to offer bespoke solutions to partner practices as well.
Thank you. Before I jump to the next question, I just want to remind everyone that if you do have any questions for our panelists, if you just want to make use of the Q&A facility and pop the questions in there, we'll then pose any of those questions to our panelists. Zandalee, if I can maybe just direct this question to you. We spoke, and you spoke quite a bit about it a bit earlier, but how does Lifecycle assist DFMs with product innovation? There's obviously we spoke about 2,000 models. Elton spoke around, the advancements in the hedge fund space. There's a lot going on, and a lot being driven by the DFMs in terms of feedback that they're getting from their advisor community. How does Lifecycle support that?
So I think it's very important to understand that Lifecycle is a completely independent platform. We don't have funds of our own, and I think that is one of the main helplines, if you can call it that, for our DFM network. They like having access to what they want access to. They don't want to be limited on what they can access and how they can access it. And because we're completely independent and open architecture, it allows them that flexibility. And I think that is what DFMs are looking for. They're not looking to be pushed to a corner by something. They want to be able to access what they need to access. And I think that's helped us in helping them with their product innovation, because they can come to us with a problem that they don't have a solution to. And we work, our whole business model is based on working with them to find a solution to how we're going to make this happen for them. So yeah, just a little bit of a short history, because I think it puts it into perspective, is that we've always developed our business based on a need by someone. We've never gone out saying we want to do this, we want to do that. And I think our DFMs, our advisors, our asset managers that use our platform all have come on with some sort of restriction that they're facing in the market, and they're not being able to do something that they really want to do. And we work very closely with our DFMs and our asset managers to facilitate a solution for them. They've all got quite personal relationship with us. Look, we're very We're a much smaller business, we're much newer, so we have the time to do that still. I don't know when we hopefully eventually get to the size of the 91s and the Glaciers and Old Mutuals, maybe that's not so easy to do, but for now we managed to have a very personal relationship with them, and we try and find a solution for what they need and what they want to innovate. So they come to us with the idea, and we look what we can find for them to make that happen for them.
Thanks. Daryl, 91, big, as Andeli mentioned, around for a long time, has its own asset management arm. How do you find the platform enables the DFM in terms of that product innovation and access?
Good. Thanks, Charlene. Yeah, look, first of all, I will say the platform runs very independently from the asset management arm. And, you know, if the platform can't stand on its own 2 feet, it shouldn't be around. So I think that, you know, product innovation for me boils down to DFM effectiveness in implementing executing their portfolio construction views, and so that involves both the effectiveness of how they can implement. So whether it's through an online portal that we provide, or whether it's through an API integration into their portfolio management system, that's the one way. And then it's around, as Alton has spoken, around the flexibility of the underlying instruments. And so if the platform can provide those 2 things, it can make it really effective and easy for the DFM to implement, and it can give the DFM access to the types of instruments they need to construct a portfolio, then I think the platform is doing a pretty good job. Now, the third thing I would add on that is around reporting and real-time reporting back to the DFM so that they can manage, you know, model drift, for example, in the portfolios. You know, what Alton spoke about is very true. So I think the next sort of evolution here is around platforms' ability to cater for different types of investment instruments. As soon as you move out of the world of kind of daily dealing instruments into hedge funds, monthly dealing, possibly private equity type of assets, you know, the level of complexity goes up exponentially. And, you know, so I think a big task on all the platforms in the South African market in the next couple of years will be to facilitate those types of investments, you know, within model portfolios. You know, today you can often hold these types of things, but not within a model portfolio. And so I think the product evolution will be around facilitating investments into different types of underlying investments. I think the efficiency box is largely ticked for most platforms. You know, that's sort of digitizing front ends to enable DFMs to execute digitally. I think that's kind of a hygiene factor now. So I think the evolution will be more around the investment universe.
Great. Thank you. Thank you all for that that context. I'm going to hand over to Dion now just for our next section. I suppose this is the one that most of you wish you had all the answers for.
Yeah, we briefly touched on this earlier about compliance and regulations. So how does platforms support DFMs and advisors when it comes to compliance or regulations such as FIA or KYC, as well as the Omni CVR that's coming in the near future?
Dion, let me just take part of that, because I'm definitely not a compliance expert, but I can tell you some of the conversations that I've been overhearing. I mean, the one big bugbear for everybody on this call, I'm sure, is around the onboarding of clients and the FIA. And if you think about it, we are all doing the same job multiple times over. You know, we all have to onboard the client, we have to put them through our risk rating process, we have to do the FIA 3 times, right? And that to me is so inefficient. You know, so I think, you know, platforms largely can do that on an automated basis now. You know, so most platforms will ping Home Affairs, for example, or ping the banks to try get verification of the bank details. But it's still crazy that we're all doing the same job three times over to onboard a client. And I think, and this isn't necessarily for the platforms, it's possibly for FIA, it's possibly for ASISA, it's for the various industry bodies, to tackle the authorities on it and say, you know, surely there's some way to solve this problem. And I think the way to solve it is some form of a digital ID for investors, you know, right, that can be used across the patch, be it opening a bank account, investing in a unit trust fund, opening a platform account. Surely the industry can get together and come up with some sort of solution. So, you know, we have been trying to drive this through our engagements with the CISA, but I think it's broader, unfortunately, than just that. We need the banks to come on board as well, because ultimately every client's got a bank account. And so one has to ask the obvious question, why can't we use the bank's FIA? So yeah, so that's kind of where we're at on that. I'll leave the other difficult compliance questions to
I think we can move on because that was answered perfectly. So let's go to the next section.
I'll just add one thing, Daryl. I'll gladly work with you to come up with a collective solution to ease this this burden, because, you know, to your point, I think it is potentially something that we can create efficiency for. So yeah, you have my support there. And maybe just one other point. I think when we think about compliance, we shouldn't think about it as a separate workflow or process. It should actually be embedded in your processes. So you should have compliant processes. I guess that's the trick, right? To make it feel like it's just a normal part of the process from an experience perspective, but you satisfy all the requirements from the regulator.
Sorry, just another point. Sorry, Zandli.
No, you can go.
On top there, I think it is the bane of our lives, whether it be platform, client, or intermediary. But I think even if you look at the increase in fraudulent activity which is happening, and it's a very real threat. So, you know, it's not something we do to irritate clients and intermediaries as such, but there really is a need to make sure that things are done properly and accurately upfront. So yeah, but I think as an industry, perhaps there's more we can get together to put a fight in place to get this done more electronically and easily. But yeah, we'll fight on.
Yeah, I think, Ferdi, as you said, you'd be very willing. I'd also be very willing to join that effort, Daryl. I don't think there's a person in this industry that would not be willing to join that effort to try and make that easier. And I think your point to the banks is a very good point. I actually have never even thought of that. And it's a very good point, because at the end of the day, we have to remain compliant. But the clients get so frustrated and the advisors get so frustrated with the processes. At the end of the day, clients end up not wanting to invest because of the tedious processes, and that is a detriment to the client, not anyone else. It's a detriment to the client because they're going to sit on their money in their bank for the rest of their life because it's too much of a hassle to try and open something. So you want to make sure that client is looked after at the end of the day whilst remaining compliant, which is a very difficult kind of balance to try and figure out. And that's why I think, to your point, I think it's almost like when FinSwitch happened, you know, that was an industry made platform, and it was very much needed. And I think a similar kind of journey needs to be followed with compliance.
Yeah, and probably with Omni CBR that's coming next year, I mean, the industry standard will make it a lot easier to comply. There's a lot of data that financial advisors, DFMs, platforms need to report on. And I think it will be critical for that integration between all the different parties to make sure that data is flowing and that we can actually comply and report on it. And it would be great if the industry can work on it to have that industry standard that everyone report in the same format. Because as we know, there is some challenges sharing data between platforms, DFM, financial advisors, and it will be fantastic if it's an industry standard. I'll hand it over to Charlene, maybe just to discuss the way forward, looking ahead, how the strategic partnership between advisors, DFMs, and platforms can improve in the future.
So I really like this section. I'm going to be asking all of the questions we've prepared, and I'd love all of your perspective on it, because looking ahead, I think is the most important, right? Is we've spoken a lot about how far we've come as an industry and as platforms and DFMs and advisors alike. But looking ahead with all the various headwinds and opportunities, I'd love to understand, and maybe I'll start with Daryl. What does the next generation of platforms look like in this fully digital, hopefully mostly advice-driven world, from your perspective?
Look, I think the first thing I'd say is that platforms have a central role to play in the future of the advice outcomes. If you think about a platform, it's kind of the meeting place between the DFM, the advisor, the client, the asset manager, the stockbroker. You know, it all comes together on the platform. And so that interoperability, if I got that word correct, you know, between the various parties is critical to delivering good investment outcomes for the clients. Now, That's not always easy to achieve. And as Dean's just mentioned, data standardization is a big part of that. But the ability for the platform to collaborate with those various role players in the future will be even more important. So I don't think that, the platform in the future is not going to be the successful ones aren't going to be the ones that are the biggest. It's going to be the ones that can integrate deeply with the various role players in the industry. And it's the ones that can help the advisor ultimately in achieving good investment outcomes for the clients. Now, that's not to say the platform should be giving advice. Definitely not. I think we should all steer very clear of that. That's not our forte. But what the platform can do is it can provide information to advisors so that they can ultimately provide better investment outcomes for their clients and to the DFMs, because the DFMs have a central role to play in making sure that the stated objective for the client is met over time. And, isn't that what all clients want? Is they want to achieve their investment outcomes, right? And so the role the platform plays is it's kind of the melting pot where it all comes together. And if platforms can see their role as facilitating those investment outcomes, then I think that's where we want to head as an industry.
Patty, do you have anything to add there?
Yeah, I echo Daryl's sentiments. I think the future for me looks to be a hybrid advice world where, some functions of your advice process will be, fully automated, fully digitized, super efficient and integrated. And that will actually enable the financial advisor to really bring the human aspect to advice and really spend time, on the goal setting and the well-being of the family, etc., rather than sort of, all the data gathering and compliance and those type of aspects. So yeah, I do see a lot of digitization happening, in future still, more efficiencies being created. But that role of the advisor and how he or she will interact, with the platform and the DFM and the client, how it all comes together, I think that will set, one advisor apart from the other.
Sandali, your perspective?
Yeah, I see it as I heard someone use the word the other day, I can't remember who, but someone said to me, a platform is a modular ecosystem. And I think that speaks exactly to what we are all striving for at the end of the day and what the platforms of the future are going to look like. It's going to be the platform acting as almost an orchestration layer between all the various parties that at the end of the day protect that advisor-client relationship and support that advisor-client relationship in a much more technologically enabled way, seamless integration, open APIs, white label experiences, everything of that, I believe, is going to become quite normal. It's not going to be out of the norm. And that's going to allow the client, like Fadi said, to have that very personal relationship with the advisor, and the advisor can actually drill down into what's important with that client rather than spending their time trying to find data, trying to find this, trying to find that.
Elton, lastly, from Glacier's perspective.
Much to that, I think if I maybe just draw to a DFM perspective in trying to create uniformity in the DFM space and the same experience for clients across platforms with the DFM. I think at this point in time, there's slight nuances across the platform. So you may be the same client of an intermediary using the same DFM but on different platforms, and you may not be getting the same experience or outcome dependent on a few factors in that space. So I think there's probably an evolution that has to take place in that regard. And I'm not quite sure what the answer is there, but maybe the DFM sort of side of things needs to find solutions in that space. So yeah, but all the points raised are extremely valid. It's a very exciting future, I think. Technology is going to create waves, as we know. But I think Daryl alluded to our platform industry is extremely advanced compared to what you see overseas from a product perspective and some of the tech we have. But the world is developing technology that will certainly advance us in significant strides.
Great, thank you. We spoke about how South Africa tends to follow in certain instances, clearly not technology and platform advancement, but follows the UK around regulation in the industry and some of the more specifics there. So as the South African market consolidates on the financial advisory side, how do you see the partnership evolving between DFMs and advisors and platforms over the next 5 years? Maybe
Sorry,
Zandali.
can I jump in before Zandali answers? So just to your point on technology, I think the UK has unbelievable technology. Their solution set is so much less than what we have in South Africa. Their regulation is not as extreme as what we have when it comes to our regulated products. So I think that's the technology challenge that we face. When it comes to digitization and integration, that's significantly advanced over there and extremely powerful and impactful at this point in time. So I think our industry is a lot more involved and intricate in terms of applying technology, and that's a big challenge that we face as an industry. Sorry to interlude there, Zandali.
No, I completely agree. I think the regulation in South Africa is extremely tight, and it's very hard to keep up because it's an ever-changing environment, and you have to align your technology to that regulation, and it's constantly changing, and it takes time, it takes money. It's extremely difficult to navigate that environment, and if the industry can manage to provide, in the next 5 years, a platform that does ever change, if you can call it that way, it's always changing according to the regulation, helps the end users understand the regulation better. Look, not clients. When I speak about our end users, I speak about advisors and DFMs. I think if you had to go into client understanding of regulation, I think you could write an entire article about how unfair that is on the end user sometimes, because it's becoming so complicated that clients cannot wrap their heads around it, unless they've got deep understanding of the financial world. But yeah, to take it back to the DFMs and the advisors, I think that we'll see a much more collaborative product roadmap, basically, that needs to kind of fit into that regulatory space, and that's what makes it difficult. And I think that's what brings up most of the challenges, and I'm sure that everyone here will agree with me on that one.
Okay, just the last one from my side, and then I'm going to hand over to Dean just to focus on the last section. And we probably alluded to it, but maybe just to unpack it a bit more. What capabilities or mindsets should platforms and DFMs be developing now to remain resilient? We spoke about the South African regulatory environment and how extremely tough that is. How do platforms and DFMs remain resilient and relevant over the next 5 years? With that in mind.
I'll take a first step, Charlene. Yeah, so I mean, we see the DFM movement growing over the next 5 years. Still, I think it's ramped up quite significantly over the last 3 years, and we expect that to continue. I think from a platform and DFM perspective, I think efficiency and scale is really important. So I would expect over the next 5 years that there may be some consolidation on the DFM side happening. But with regards to partnering with DFMs, from a platform perspective, I think working together as partners to give that end-to-end, client experience, I think is going to be even more critical, to set ourselves up for success, going forward. So yeah, I would expect more closer collaboration even than currently between DFMs and platforms, to really build solutions that, planners and clients sort of not only value, but really get good benefit from.
Daryl, do you have anything to add there?
I mean, I agree with what Ferdy says. I mean, I think it's, 5 years is a long time in anyone's books, and a lot can change in 5 years. I just think what's changed in the last 2 years. So I think the partnership between platforms and DFMs will probably just strengthen over the next couple of years, because ultimately we're both in the same game of helping advisors give good outcomes for their clients. And so the platform's role has definitely evolved from a custody of assets role into more of a partnership role with the various role players in the industry. And so, whatever can be done to strengthen those partnerships, be it through data or building efficiencies or giving good information to advisors on their clients, all of those things will continue to evolve and be developed on. So I think it's, we're in a good space, and I think it can only get better from here with the technology that's coming down the line.
Yeah, over to you.
Thanks. Just a reminder to please post any questions in the Q&A. We don't see any questions here, so please post it there. I think the panelists already actually answered my last question, and it was about that partnership between platforms and DFMs. But I'll just open it up to the panelists if you've got any maybe closing remarks. We're reaching the end of the webinar. If there's any closing remarks about the partnership, about DFMs, between DFMs and platforms to enable financial advisors to cater for a more broader audience.
Yeah, Dean, I don't mind starting off that one. I think it's a critical partnership going forward. I think we've already alluded to the role of the advisor in terms of a behavioral finance aspect and a psychological framework. And I think not that they need to pay no attention to it, but to remove the responsibility of having to due diligence funds and managers and all that process, building an investment philosophy in your practice, being able to back up your decisions on which funds you choose, etc., to not have to do that and focus really on your critical skill of advice and behavioral finance and emotional safety and confidence for your client. I think those are the key outcomes of a great partnership in this space. The DFMs, I agree with what Freddie said. I think we may see some consolidation at some point in time, but that's just a natural evolution of our industry, I think. But ultimately, it's about empowering the advisor to spend more time with the client, build confidence with that client. And the clients are ever changing. Their needs are becoming much more dynamic than just financial needs. They want you more actively involved in their holistic life. And being able to empower them with that time to do that is going to be a core function of what the platform delivers, as well as what the DFM delivers. And by doing it together, I think it's only going to enable that opportunity for the advisor in a significant way.
I'll go next. I think, if I had to sum up sort of a platform partnership with an IFA, firstly, it's really about meeting the IFA where they're at in their practice, and to help them achieve their strategic objectives for their practice. Whether it is to improve the running of their practice, or to grow their practice, or potentially even exit their practice. I think we can certainly be a partner in all those aspects. And then from a DFM perspective, I think we've spoken about the partnership at length today. I think we committed to that partnership, and we see it really prospering over the next few years.
Thanks. Then I'll hand it over to George just to conclude the session.
Hi, everyone. Yes, without a doubt, I think, Elton, you summarized what I would like to see and what is taking place. I think you hit it on the head there in terms of this collaboration that's required going forward. Just from my side as well, I was very fortunate to attend a broker conference, as they termed it, in Ireland in May. And they had representatives from Australia, New Zealand, America, Canada, Europe, as well as the UK. And they represented advice, they represented platform and technology, plus they represented DFMs as well. And in the discussions that ensued over 2 days, it was very, very evident that the South African platform environment is exceptionally advanced relative to what we see around the globe, to the point where most advisors in offshore jurisdictions, if asked, would you change your platform tomorrow if you had something that met your needs and your clients' needs? And the answer was yes. Where the overwhelming response on the South African side that was seen in the Langcat report was, I think it was over 80% said that they would stay with their provider in South Africa because of the professionalism and because of the capabilities that the platform providers gave to them. So well done to you guys. I think it's an ever-evolving environment. And I do support you. I can tell you right now, if you guys are going on a pilgrimage to get this FICA issue resolved, you will have every financial advisor, every DFM behind you guys, because we know it has become an exceptional burden to have multiple FICA done on a client in a single transaction, which is just counterproductive and just slows down the entire process of what should be treating the client fairly and getting the client serviced as expediently and as economically as possible. So to the panelists, to each one of you, thank you very much. To the moderators, thank you so much for your engagement. I think the audience has certainly learnt a lot today, and they also know that it's not a peg in the sand. This is a moving, evolving process that we're going to see over the next few years. And hopefully I'll still be alive and around when I see some of the benefits of what you guys were speaking about coming to the fore. So thank you once again to everybody. Sandra, I don't know if you've got any closing comments.
I do, but I do see that one or two questions have popped up, and considering we have some time, do we want to
Absolutely
cover that? So I can see under the Q&A, I'm not sure if anybody wants to tackle this, but do any of the lists have plans to offer crypto to clients?
Let me start with that. That has no doubt been driven a lot by Bitcoin's latest price. And so it's obviously, I think what happens here generally is the clients approach the advisors, and the advisors feel compelled to deal with the crypto in some way. Now that there are a number of regulatory hurdles that one has to consider when considering offering crypto through any of the regulated products. For example, you can't hold crypto in retirement fund vehicles, and so so it's not as easy as just saying offer the crypto, because it's not that easy. But you can actually hold crypto through some of the regulated vehicles that have been launched. So BlackRock has a listed ETF, IBIT, and that is a ETF that holds Bitcoin 100%. And so, if you wanted to invest in that through a discretionary product on the platform, you could hold crypto in that fashion. The benefit of that is obviously you're buying it in a regulated vehicle, and you know that your assets are in proper custody. So it's not, I think, for platforms to go the full hog into the crypto world is a big leap. I think a lot of the systems that the platforms currently operate on wouldn't easily deal with crypto. It's quite a step to take, but certainly, it's on the horizon for many of us on the call, I'm sure. I've had a lot of requests for it.
Yeah, it's certainly a topic that comes up, I would say, probably every second month, from our side as well. And I was going to raise the ETF option as well. I don't think there's further work being planned on our side apart from that.
Thanks, guys, for that. Just a word of caution on the issue of crypto at this point in time. The professional indemnity cover that you get in South Africa here does not cover advice on cryptocurrency or any derivatives thereof either. So we are at the FIA working with some insurers to try and get that incorporated. But as things stand right now, there is no professional indemnity cover if somebody does give advice on crypto and the client challenges them, and they are found to be wanting in any way. So just be aware of that at this point in time. The FSCA has got an exemption on it. However, the exemption still puts you at risk of not having the professional indemnity cover for the advice on crypto. And once again, just to emphasize, even derivatives thereof, because we are aware, as you guys have pointed out, that there are ETFs with very small holdings, 5%, 2%, and so on. Then I see that we had a question on what are your thoughts on the use of blockchain? I'm throwing that out to the panel. Any of you happy to pick that up?
I can give a quick overview. I mean, we have experimented a little bit with it on our side. Look, I mean, I think blockchain, on the face of it, it seems like it is quite appealing if it can work, but there's a lot of work required that sits outside of the client register piece. So what the blockchain effectively does is it replaces the core backend system of the platforms, which is effectively the client register and the trading capability. What it doesn't do is it doesn't build in necessarily all of the rules around Regulation 28 and maximum income withdrawals in a living annuity and that sort of stuff. That stuff still needs to be built somewhere. And so it's interesting at this stage to look to see what it could potentially do. Like I've said, we're looking at it, but it's not, I don't think it's on the horizon for anybody in the next couple of years.
Any other comments on blockchain? I see Fundrock. I attended one of their seminars in Cape Town the other day, and they spoke extensively about the use of blockchain fractionalization and tokenization as well. So I think that's a very exciting future space that we no doubt going to see. So yeah, let's see how that unfolds. I see there's also another question around how is a DFM different to a fund of fund? Dion or Charlene, I can throw that at you, or I can answer it as well. I don't know if you guys want to just pitch in there.
Yeah, I can answer it. So it's essentially the same. A DFM or multi-manager is the same. It's just for a different vehicle. So a model portfolio, you invest directly into the underlying instruments, ETFs, unit trusts, or hedge funds. But if you make switches on behalf of a client, there will be capital gains if it's in a voluntary investment. Whereas a funds of funds is a more tax efficient structure. And it can also have a lower fee because due to the bulking of assets, one can negotiate better fees with underlying fund managers, but essentially it's the same. One is just the vehicle, the client can see the underlying holdings, but there's capital gains tax if we make switches, or funds of funds where it's a single fund with multiple underlying funds, and the DFM can actively manage that fund without any capital gains tax to be triggered for the client.
Thank you very much there, Dion. I just want to flick back to the Q&A to see if there's any other questions that have popped up there. Okay, I don't see anything else. Just go back to the chat here as well. All right, there we go. I see Sandra has also jumped in to get a couple of adverts in for the FIA. The hosting of the Omni Risk Return Workshop on the 6th of November. And the coffee chat with Sam and Brad, which I would encourage all members to attend. It really is worthwhile and gives you some good tips on what to look out for in your business. But once again, guys, thank you very much for your participation. Really appreciate it for taking the time out of your day. And yeah, let's watch the space. I think we've got some very exciting times ahead of us. So Sandra, I guess you guys will finish we'll turn it off and say cheers to everyone.
Absolutely. Thank you, George. And thank you to the panelists and the hosts and everybody, and to Lani, who runs things in the background for us. Thank you to the members and our guests for joining us today. Really appreciate your time.